There are many reasons why structured warrants are so popular among investors. The first is leverage, or gearing level. A warrant enables you to gain exposure to a security for just a fraction of its price. Therefore, warrants tend to move in greater percentages than the underlying shares, offering the potential for higher percentage returns than if you had bought the shares directly. The second reason is limited downside losses. Because warrants are so much cheaper than their underlying asset, you won't lose nearly as much money if the asset falls in value. The third reason is lower capital outlay. If you don't have the available funds to purchase shares in the underlying asset, you could purchase call warrants and still benefit from a price rise. Because of the significantly lower outlay for warrants, brokerage and transaction costs are also lower. Fourth, there are no margin calls. Even if the underlying share or index moves adversely, you won't have to make margin top-ups. The maximum exposure to the investor is always established at the start of the trade. The fifth reason is diverse market exposure. By purchasing index warrants, you can participate in an entire market or sector without having to own a large portfolio of its constituents. Also, warrants on foreign underlying shares allow you to invest in overseas markets without the risks of going offshore. Next, warrants allow you to go long or short on the underlying asset. With call warrants, you can boost your profit potential if a stock goes up, while put warrants enable you to benefit from sell downs. Put warrants are particularly useful as they are one of the few products in Singapore that allow retail investors to go short on stocks. Finally, all warrants listed on SGX have designated market makers to provide continuous bid-ask prices, allowing you to buy and sell warrants anytime during trading hours. However, like all financial instruments, structured warrants do come with risks. Unlike their underlying assets, warrants have a limited lifespan, and if they expire out of the money, they become worthless. Next, just like warrants can produce higher percentage gains, the losses can be magnified as well. The good thing is, losses are limited to your total investment outlay. And finally, as a warrant holder, you are an unsecured creditor of the issuer, meaning if the issuer is unable to fulfill their obligations, you have no claim to any of their assets. For many investors, however, the rewards of trading warrants outweigh the risks. In our next video, we'll discuss the ways you can use structured warrants in your portfolio.